Hi, from all of us here at the Mortgage Real team, we wish you and your family a very happy Thanksgiving. It is November 24th, and this is your Mortgage Rate Watch. So, jumping into what happened in the last 24 hours, yesterday the Federal Reserve, Ben Bernanke, released their Federal Reserve minutes. And what that brought out is, for the first time, the Federal Reserve coming out and acknowledging what their action plan is and how they see quantitative easing affecting the economy. And clearly, one thing that they did say is they realize that this is going to weaken the U.S. dollar. In their eyes, by weakening the U.S. dollar, it promotes a stronger stock market, and having a stronger stock market will promote a better economic recovery. Now, in this, there is a couple things that we have to keep in mind. For homeowners out there, when you have a stronger stock market, and that's promoting if you try to break this all down into a simple way, corporate America starts seeing better earnings. When the corporate America starts seeing better earnings, then they start to hire and they start to build again. Well, the long-term aspect of it is if corporate America starts to hire, then hopefully unemployment will ease. That is one side of the story. No matter how you look at it, for bonds and for mortgage rates, for mortgage-backed securities, this whole cocktail mix, the whole thing about it is when everything is looking to the upside, well, interest rates have to move along with that. And now that this is all being put out there and everyone's starting to understand the action plans of the Federal Reserve, it now is coming into some type of I guess we want to say a notion across the board is that mortgage rates aren't going to be able to be pressured lower from this point. If there were significant signs of deflation, then that could be a possibility. Keep in mind that's what we were fighting in 2009 was deflation. Moving into 2010, deflation now is somewhat being not wiped off the board. It's still a concern that has to be addressed, but we're looking more at the signs of inflation with all this money being pumped into the system and how it's going to affect everything. So clearly right now, as long as the economy starts to show an economic recovery, then interest rates are going to move higher. At this point, we are seeing somewhat of a floor of support. It could move lower, but then again, it's all based on economic activity. Yesterday, we saw a ton of volatility coming out from the attacks from North Korea on South Korea and how that's all going to play out. So there's always going to be these times when something either globally or economic data that comes out here in the U.S. that's going to impact interest rates. But keep in mind that since the Federal Reserve has acknowledged this, that most economists are on the same page with it, saying that, okay, at least they've acknowledged what they're doing with the U.S. dollar and weakening it. And then now, if the country does move forward, then interest rates are probably going to be pressured higher from this point. So that's one of the key points that we wanted to put out there is that if you're still on the fence thinking interest rates are going to go lower, it'd be a really good time to talk to both the financial advisor and then any one of us here at the Mortgage Real team, because we've definitely been keeping on top of this, as you can see from all of our posts on a daily basis, and just really getting a clear understanding of why anyone would really have that type of speculation at this point. So, in wrapping up, thank you again for all of your views, all of your comments, and your feedback. We're going to have a lot of improvements and changes coming here right before the end of the year, and we're hoping everyone's going to like it. But most importantly, thank you to all of our viewers. From us, just having a time to reflect. We are very thankful that the Mortgage Real has been able to impact so many individuals and families out there, and just trying to shed a different light on what's going on with all of this chaos, what it seems to be chaos. And we wish everyone, again, a happy Thanksgiving. So we will be back. Friday we're going to take off, so we'll be back on Monday of next week to start this whole thing all over again and keeping you up to date on what's impacting your most valued investment, your home. Happy Thanksgiving.